Hello everyone, welcome to another episode of Snakes and Ladders. It's 2026. Happy New Year, lads.
Dude, you sat so still that I thought your video had frozen. You're like pre-show. That was
Well, for those of you who can't see us, obviously before we record, I'm the professional that takes a breath, does my voice work, etc. Well, these guys just mess around with their microphones. Anyway,
actually, I spent the last 10 minutes trying to avoid that light reflecting on
that we could still see it anyway. How has the year started for you, lads?
Cold.
Yeah, -7, huh?
-7 over here. The dog does not enjoy being walked in that kind of temperature, I can tell you that much.
That's even colder than it was in Sweden for me. That was only -3, -4, yeah. That was great, though. Is it that nice cold with the sunny, crisp days? Because I actually love that. Or is it a bit grey and...
No, it's lovely until tomorrow, and then it looks like it's going to piss with rain, so a bit less enjoyable.
But at least it'll warm up, so, you know.
Yeah.
Well, to start off this year, we have a little bit of a special episode. We want to go a little bit into what's been happening in the markets, but also we want to talk a little bit about ourselves later and what are some of our goals for 2026. Share some of our ambitions, aspirations, so that our fans, you, can be inspired by where we want to go this year.
I just want hair as good as yours.
Never going to happen.
How many trips to Turkey can you have?
Never mind.
More interestingly, in the market, talk about the year starting with a bang. I'm not going to delve into the sort of geopolitics too much, but I'm not sure how many people really had DJT sort of capturing Maduro on their 2026 forecast list, but I certainly didn't.
No, Bastard keeps sort of scuppering our attempts to stay UK centric with his wild.
Yeah.
What the fuck?
I think the thing that's most amazing about it, if you take that event aside, is just on whenever it was it Sunday morning, overnight, Saturday, it kind of happened, and then we all read about it. And the one thing I thought was, from a market's perspective, surely it's going to crater on Monday because people are going to be super risk off, thinking, you know, the American president's happy to sort of swoop in and take other presidents out of their, you know, dressing gowns and take them to New York judges. But it hasn't at all. I mean, the market's completely ripped. The FTSE 100 is now north of 10,100 points. Just a few smatterings of companies. So obviously the defence companies, no surprises, have really gone up. So BAE Systems in the UK plus 10%, Babcock plus 10%, Rheinmetall plus 12%, which is a German defence company. And then oil services.
Hang on, can we just break these down a little? Because I'm kind of curious to get your takes a bit on defence. I want to all of them, Jimmy, but having read through these, I thought we'd already been sort of saying, oh, you know, defence as a play last autumn. I think it's kind of interesting watching that market have a resurgence, having been kind of ignored is unfair, but it's certainly not been in the limelight, has it, for a while, as we were sort of globalising. To me, that Donald Trump move, if that's what we'll call it, really cements this. Like, if you were in any doubt as to whether defence is going to be important in the next few years, just speaking purely personally, I was like, no, this is clearly now a sector that's going to continue with importance. We're not just because of him as an individual, but any move like that, subliminally, I think, gives permission to other leaders to think maybe a bit braver, a bit bolder. I don't know. But I just went from kind of thinking, oh, this is interesting, to thinking this is probably going to be an absolute goldmine for people for the next few years. I was curious what you boys thought.
Ben?
Sorry, what do you mean?
Well, what I mean is it's gone from like part of a spread of things that could do well. You know, we've spoken about copper. It feels kind of good for AI. That's on the list, isn't it? Things that's rocketed into being like completely concrete. I think we are going to see more and more geopolitical events that trigger defense stocks.
Defense stocks.
Yeah.
Well, I know defense was definitely what I was hearing last year. I'm not sure if we mentioned it in our 2026 preview, but I have heard a few people that were talking about defense stocks in 2026. I didn't expect them to spike so quickly. But I mean, to be fair, I'm not particularly that savvy when it comes to defense stocks. You know, do defense stocks keep on going up? In peacetime, do they suddenly just sort of slowly tail off?
Yeah, I think it's taken. Well, go on, Jimmy. Sorry, you first.
No, I was going to say, last year defence played a very big role in the market surge, but it was kind of around that period where Trump was trying to, after Liberation Day, he then said, well, I need to sign trade deals with everyone. And my understanding was part of a lot of the trade deals was your defence spending has to be a higher percentage of GDP than it has been. And so once that basically became clear, all the defence stocks rallied massively. But then for the last 3 months of last year, I think actually most of them were down, not masses, but I think they were down a little bit. And there was very little talk of them. So no, I think that's right. And then it's changed.
You've nailed it as ever, Jimmy, put it more eloquently by giving proper insight. We went from speculation on defence to a reality. For me, that this recent news has moved us from, defence could be interesting, to this is like a cold hard, we are going to need to be not on a war footing exactly, but anybody who's not paying attention would be kind of crazy for the next few years. So I just think it's really interesting. I think that will have a big ripple effect, as I say, because not because I could remotely predict what's going to happen next, but I think a move like that will allow other people to make other moves, not even indirectly linked, just simply thinking, do you know what? Maybe I should be bold and brave and cool like Donald.
Sorry, are you saying that people would do that to move the markets in a way, at least sort of
No. The markets will just be the secondary beneficiary of that. No, I mean that there'll be other political moves of one kind or another. Maybe they continue from the US, but maybe they come from other places. But that defense stocks as a secondary back, the investor will go, shit, this is more and more important. The people are going to keep investing. Every government everywhere is going to keep investing in their defense. So anybody who supplies for defense is now somebody I'm going to be looking at.
But why is there something historically now that makes up? It feels like there's been sort of these geopolitical events or sort of hotspots in every decade. Why now? Why is this particular? Why would it be particularly strong now?
Because there's been a deglobalization narrative starting from the tariffs that Jimmy pointed out, that has turned into an active maneuver. Crossing a border, taking another president. That's massive politically. It's a massive step away from, hey, you need to spend a bit more on your defense if you want to keep trading with us. I think it opens the door for more action and less talk.
And I think there's also the interesting bit of what does this, and I'm not a political expert, but what does this mean with regard to China's stance towards Taiwan? What does it mean with regard to Russia's stance toward Ukraine and all these places? Does it embolden leaders who are thinking, actually, if the US is happy to kind of do what it wants, then perhaps we can do what we want? And so do other nation states think, well, we've got to add to our defense budgets to try and see these problems off? It's a very interesting question.
I've always thought the China-Taiwan thing is so strange because, for the past 2 years, everyone's been basically projecting that they're going to invade in 2027, right? That's sort of not that I've been through many wars, but just haven't lived in a time where people are like, well, in 2027, i.e. in 2 or 3 years' time, China's going to invade Taiwan at that point. They're now building, sort of all kinds of tank and other artillery ready to go in for 2020, as if it's in the scheduled in the calendar. So I just find that completely bizarre.
Now you said that, it is completely bizarre, isn't it? I wonder why it's forecast. It very clearly is. I mean, it definitely, that there is an expectation there. Anyway, sorry, that was just the first one. I just felt there was something landmark about that from a defence markets perspective. And as you said, we're not a political podcast, so I have no idea who's going to do what, kind of why, but that's landmark. The US just did something quite big there, which on its own, Ben, to your point, shit has happened, right, in decades, but I think feeds into a narrative we already had starting to play of deglobalizing, of people starting to be more protectionist, led by the US. I think that's a tipping point.
Why here is we haven't missed our opportunity to buy any defense stocks.
No, I don't think so. No,
but also, does that mean and I know SpaceX isn't a defense company, but
it's got a big overlap, isn't it?
It's not too big a reach to think that all of a sudden, if SpaceX IPOs, then does that mean that they could push?
He will be the world's first trillionaire.
Yeah. And similarly with Anduril, which is one of the largest private unicorns in the world, does all of a sudden that chap, what's his name, Palmer
Luckey.
Does he sit there and go, now's the time to IPO this thing? And
Palmer Luckey is such a fucking name, by the way.
But I mean, what a wild guy, right? He's the guy who invented the Oculus, sold it to Facebook, and then decided to start a munitions company. It's wild.
I didn't know he was the one that came up with Oculus.
Yeah.
Rift or whatever the original one was.
Yeah, he sold Oculus to Facebook, and then
that was a good move. They've really done a great job with it. Okay, sorry. Next on your list, Jim.
No, so I think there's a lot of them. All services are much, much higher. Coppers continue to rip, so it's now up over 40% in the last year.
No?
Even crypto, Bitcoin's up 6%, ETH's up 8%, XRP's up 20%.
Can anyone explain that to me? Can anyone explain that?
Risk appetite on? Yeah, I don't think I can explain it, but it suggests, and then this is back really still to the president move. And by the way, do you think oil was related to the fact that, come on, oil's got to be why he did it in the first place? Somebody put out a great chart of how many million barrels of oil there are in reserve, and that was the country number 2. So it's like, okay. But like we were discussing in going into Christmas, that it seems to act like a risk barometer leveraged, right? And my view on that is we've got midterms. There's been a kind of like, what's the US going to do? Is Trump going to seize this, or they're going to be quite flat? And I think this is quite a bold, like, no, we're not going to be flat. We're going to grow. We're going to take. We're going to seize. We're going to do what we need to do to grow. If you're predominantly therefore exposed to US markets, you might become more risk on as a result, and the ripple effect of that is your leverage play into crypto. That would be my very rough thesis for why it might have done well as a result.
I wouldn't say it's wrong. I mean, it kind of makes sense, I suppose.
You also wonder, and it's one of those things I've never quite understood, but there's also a lot of people use the end of year periods to crystallize tax losses and tax gains.
But you'd expect that to be like in crypto, you can trade so fast, you'd be out and back in again, right? I don't think.
Yeah. It could be people who say, I was managing some money and I'd bought at $120,000 per Bitcoin. I'd have probably sold that for a loss of whatever it was, $90,000, so $30,000 loss, crystallized the losses for tax purposes, and then bought it in the new year when it looked like there was a bit of strength. I don't know.
You think you might have waited on it a minute? Maybe. I'd have thought with crypto. I mean, we've done that, crystallize a loss here and there, but I've done it instantly, trade it out, buy it back in again at the loss. I don't know. Interesting. Yeah.
Bringing it back closer to home, the UK high street. So as long as I can remember, Next has always either been the first, or it's seen as the real bellwether for the UK high street.
Why? But
I have no idea why, but it's just always been that way, that Next tends to report its numbers first. So everyone watches to see have the retailers had a good Christmas or not. And so this morning, Next put out some very robust numbers, said they've had a great performance over the festive period, which then sent up the likes of Tesco's and Sainsbury's and other kind of retail shares. Obviously, investors expecting everyone to have had a bumper period. The one bit that was interesting, though, was they've really tempered their growth outlook for this year. So they've managed to grow plus 10%, their revenue plus 10% last year, whereas they're now saying, actually, we think it's more likely going to be 4.5% this year.
What did you take from that? It almost felt like the Christmas spend was a bit of a relief, rather than like, yeah, this is it, we're on the up and up. It was more like, okay, fine. It wasn't a total fucking wipeout like we were expecting. I don't know. It couldn't help because that forecast says, yeah, we're not expecting it to keep cracking on here, is it?
Historically, when companies put out guidance, the general rule of thumb is to try and put out numbers that you can hit at the very least. So do I think that if they've put out 4.5%, they're only going to do 4.5%? No, I would have thought they'll probably do 6% or something like that, because they want to beat expectations. But even so, that is still, 60% of the growth rate of what they've achieved this year. And so what's the reason for that slowdown? It will be very interesting to see the likes of Tesco and our favourite Greggs over the coming days, see what happens there.
Yeah, just for our viewers, after Jimmy's predictions for 2026, we've all gone in long on Greggs.
which you'll be able to see on Snowflake. We won't be doing a spin to win this week again because it's special, but it will be back, and Greg's is in Snowflake, so you can track our huge victory with us over the course of the year.
Also, on some sort of economic news, one of our favourite topics, generally cars. New car sales breached 2 million for the first time since the pandemic. Chinese brands continue to really take market share from European manufacturers. What does a robust new car sales market look like? Well, interestingly, it kind of follows on from the high street. Generally speaking, strong car sales indicate robust consumer confidence, decent household financial health, lender confidence that they're happy to loan people some money, thinking they're definitely going to get paid back. I mean, all in all, it's generally quite positive. But however, that is still basically where it was in 2019. So it's not as though it's kind of amazing, but still, it's quite a milestone.
I've got a couple of takes on this. There's a few, but firstly, look at a really high level. Base rate came down a bit. That took the pressure off the rates you were paying on the leases, right? So as a very base case, those monthlies started to come out down. And let's not ignore the fact that pretty much all new car sales are leased. It's the vast majority anyway. The second part of this for me feels like that Chinese manufacturer making costs realistic again. You know, I as a car lover, it felt like the COVID period did something totally nuts to all these car producers. Like every car that you've got benchmarked in your head, even if you adjust for inflation, like, Jesus, they've really kicked the back doors out of this. Like a 5 Series you can spec it to 70 grand. You go, what? Hang on a minute. Where's this happening? Suddenly it's like resetting that expectation and therefore giving you permission to go and buy a new car again. Whereas before, and I understand that the reasoning behind that was because we leased them. So no one really looked at the full value. They looked at the monthlies and there was a whole residuals game going on. The other one that's a little slight side look on this, but I wonder if it isn't having an impact, is there was a whole load of data about people keeping cars longer, right? And there's been a really big successful video from Harry's Garage with Jeremy Clarkson talking about peak car in 2015. And I would say as a car guy, I totally understand that. But also all of those peak cars are now old enough to start fucking falling apart and needing maintenance. And unless you really love them, I genuinely wonder how many people sat on a car post-COVID when it was all a bit frothy and have gone, do you know what, I'm really bored of fixing this thing, I sod it, I'm just gonna so my point being, like, even if I can't get the new BMW, this Korean one looks really cool, because loads of them do look really good. You get in them, they sort of feel quite cool. The tech, the clever thing with them, and I think it's going to age badly, but of course that first feeling like a cool new iPhone, it feels gadgety and sort of, and in the same way as an iPhone then feels crap in a few years' time, I fear they may too. But I think those are combined on that. I'm really, that, by the way, plus the EU guidance pushing back on petrol engines and just backing off a bit, it's all starting to give you a little bit of hope. But I'd still be really nervous. I know it was my big pick for the year. I'm still absolutely terrified as to whether the Germans will benefit, because they're who I'm backing, and I don't know. It's definitely on a knife edge.
I'm still just amazed at how many people buy new cars. I mean, it is because
me too, Barry. I'm with you on that one completely.
Fundamentally, the second that thing leaves the showroom, you've lost as a percentage how much?
20%.
I particularly don't get that with like mid-range cars. I sort of understand it. Like I've been just gently going, I wonder if that Morgan Super 6, Super 8, whatever the bloody thing's called, is worth going to go and buy, right? And then you kind of know you'd lose the value, but you specify everything about it. You go do the journey. But if you're buying like a Ford Focus and knowing you're losing 20%, why do you do that? It used to be company cars that leased it all, right? That's what got the slow out into the market, because companies lease them new and then they all, I don't know. Yeah, it's a really interesting question.
I assume that if you purchase a new car, you get a much better interest rate than you do purchasing a used car. No.
Sometimes brands do deals, but no, not as a general rule.
Oh, really? Yeah, okay.
Yeah, I completely agree. I have no idea why.
It could be that, and maybe we could look that. I could have a look at this. That the new cars tend to be genuinely leased as opposed to hire purchase agreements, right? That nuance within all cars are financed, but not all finance is the same. But I'd have to look that up. I should know that really, but I don't, and I agree with you both. I think it's kind of wild, isn't it? Speaking of new cars, can we just wedge a section into this? Has anybody looked at the real life photos of the new Jaguar?
The pink one.
Mm-hmm. Well, yeah, yes. The real life one, yes.
Because I'm going to have to eat my fucking hat. I really like it. It's okay. And to be fair, I don't think I ever, luckily, slagged off the car. The rebrand was
yes, you
terrible,
did.
And the car
yes, you
was
did.
a concept.
You definitely, yes, you
reminded
did.
me. I definitely. Somehow it's got some little side repeater indicators. It's got a number plate. The grills had to actually appear now. That one of the things was it had no grill. This weird sort of slats at the front that made it look like a robot out of a movie or something. It's now had to have a grill to cool itself down, and just a few small changes. And I'm thinking, I still don't know who's buying it because Ben's first comment was, it was huge. I was like, yeah, it's very much like a sort of Bentley Rolls Royce scale car. So I don't know quite who it's for, but I did think, oh, shit, let's get. But also, I thought shit, and then I thought, no, that's great because I really want Jaguar to succeed ultimately. And now they've fired that knobhead Jerry, and they've gone right back on the branding. They're now showing the car with the legacy of like how the brand has evolved and how they've done this in the past. I hope it works, and but I have to fully admit that I've U-turned having seen this real one. I've not seen it in the flesh, so maybe I hate it again.
When will we be able to see it in the flesh?
When will we see it? I'm not sure, but summer it's due for release. And therefore there'll be a few out before there.
Yeah, spriggy time. Oh, very good. And the final one I wanted to touch on was, it's quite interesting. So the FT's reporting that the UK government is now exploring new ways to encourage retail investors to buy short-term treasury bills. What is a short-term treasury bill? It's essentially a UK government bond that has less than a year in duration on its term. Circa £100 billion, the circa £3 trillion worth of total outstanding government debt falls into the short duration category, which I didn't realise.
That one for me again. 100 billion of the 3 trillion of total debt.
Yes.
Is coming due, basically. Would that be the
No, falls into the category of, yes, between 0 and 12 months.
Yeah.
So sorry, these are bonds that have been, these are bonds have been sort of issued 5 years ago, but are just coming into their final term.
No, so when they issue bonds, they can issue a 3-month bond, a 6-month bond, a 1-month bond, a 5-year bond, a 30-year bond.
30-year bond, yeah.
And so that's basically what I didn't realise is that the US government actually issues closer to 20% of its total debt into that category, which is obviously a much higher percentage than we do.
Why would it do that? It seems like a more volatile way to behave.
So it's basically because all these governments' debts have ballooned and they've got higher and higher and higher, the coupon you pay on a 30-year is generally speaking much higher than what you pay on a 6-month treasury bill. So the 30-year,
that's because of sort of discounted cash flow.
Whereas at the minute a 6-month treasury bill is 3.8%. So what they're going to try and do is they're going to try and bring the issuance of longer term duration down with short-term duration because they think it'll reduce the cost of their borrowing over the long term.
Sorry, stupid question.
Cause a horrible spike, couldn't it?
Why would anybody be that interested in a 3.8% bond for 6 months?
Risk-free. Money risk-free.
Yeah.
Wait, I mean,
this guy, you could be making 20%, man.
No, but at 3.8%, there are other pretty risk-free ways of doing it.
Not as substantial. Look, I know what you're probably thinking, like a savings account in your bank, right?
Yeah.
Yeah, but not if you've got to place serious money. What I think is interesting, to your point, is why would a retail investor?
Yeah,
exactly. But put it a different way, if you've got over 80 grand, so you're over that protection limit, arguably it's at more risk in a bank account that could fuck it up than it is in a government. But arguably, listen, I hear you, dude. But
if the government are putting together, how do we get more people to buy these 6-month bonds at 3.8%? I mean, retail. I think that's the impossible marketing task, right? Because you could put it in your Revolut at 4.2 if you've got a £40 a month Revolut account.
By the way, Revolut, if you'd like to sponsor this podcast, we'd love to.
You are right, but also there are limits. So, for instance, HSBC on a number of their savings accounts have a 50k cap.
I was going to say exactly.
Present, I think the minimum sum of money you need to buy a 3-month or 6-month treasury bill is £50,000. So if you've got
it's scale is the answer, Ben. It's scale. If you need to put £1 million somewhere, you can't. You would find even Revolut, if you read the terms and conditions somewhere, will boot you out. They'll go, "Oh, sorry, too much. We don't want to pay it."
I don't know. Just would have thought private banks or something would be able to give you a similar rate if you're willing to load them.
The thing is, I think what you've got to view is that that type of Revolut and Barclays, and loads of them do it, right? A sort of decent interest rate is quite probably in their marketing plan to keep mass retail people, customers, right, that have then got a paid account. So they're like, well, we can afford this because he's paying for his account. He's doing all these other transactions. We're not losing money on it because we've got a small margin on it, but we can afford to do it. But as soon as you've got proper money, it's no longer in their interest. They need to find ways of making money out of you. So I think, I really like that observation because on the one hand you do go, it's not that sexy, is it?
No, 3.8 guaranteed 6 months. Yeah. If something's going to combust from you putting your money into it and combusting 6 months later, I would suggest maybe do more due diligence. And that's coming from me. So,
bloody hell. Well,
right on that KYC note from Ben. Right, as Ben's full of chat about how much money he makes on investments, he can start the 2026 goals and ambitions chat.
Yeah, so goals, ambitions, resolutions have always been actually quite important to me. I'd say the past 5 years, I've been incredibly good at keeping my resolutions. And, this is the one time of the year where actually you can take a step back and you could get excited about the new year. Give yourself a bit of a break over Christmas and think, well, how do I want to reset life? Now, because I've been so good, and this is one thing I think people need to remember, is if you have been good with your resolutions, you also need to remember some of the stuff you are doing well. So, I do lots of things. I work out all the time. I starve myself, which might not be seen good, but for me, it's good. So I've a lot of my resolutions I've continued. So, I'm starting from what I consider to be a relatively high bar. And, last year, I think we all had very good years. We certainly did on the business, but that took a lot of graft and a lot of hard work and a lot of future planning. And what I found myself is I'm not actually living in the moment very much. I'm a married man with 2 children. I live in a beautiful country. And most of the time I was worrying about what I needed to do the next hour, the next day, the next week. And I think my main thing, the rule for 2026 is 2 things. Number one is to be grateful of what I have and live in the present a bit more and take a bit more of a breath and not always worry about what more we have to do and what we have to succeed, what we have to do to succeed, and sort of enjoy the world around me for a little bit. And the other one is energy. It's to maybe wake up a little bit late sometimes to give myself more energy for my wife and kids, and most importantly, my wonderful podcast co-hosts.
What I heard there was my New Year's resolution being awesome.
Yes.
Stay awesome.
I've started from a really high bar.
Go on, sorry, Jimmy.
Ben's gone with a very holistic, all-encompassing, and my first one is managed to get a handicap at golf.
Oh, wow. Any handicap? Then they go up to like 29.
Dude, Jesus Christ, isn't this supposed to be aspirational?
I don't have a...
I'm pretty sure you can get a 29 handicap by chucking the thing.
It's not to do with the level of handicap. It's to do with actually getting one. So you have to play. There's some. You have to basically play.
His resolution is to book a handicap session. Well done.
Yeah. So it's basically to play more golf.
Well done.
Just play more golf. It's fundamentally what I've ended up with here.
And you didn't need to play more golf, just for the record. All you needed to do was log your golf, basically. So you just need to bring your Apple Watch to a golf round.
Is that what
how much golf have you played, Jimmy?
What? Bring your Apple Watch? No, it's just I'm laughing at Ben tracking everything.
Last year, probably once a month on average.
Okay, so you're decent with a stick then.
I don't think I say decent. So I know how to go, but it's the
you
same
had to
thing
book
with
a
everything.
handicap session.
I think I just need. I actually don't know how it works. Someone told me you need to play around. You need to play 3 rounds of golf with a card with someone who's a member of whatever course it is, and then hand the card in, and it gets registered.
I didn't think it was
but
3.
I don't know if
Yeah,
that's
you do need to play a round of golf. You do need to play around, yeah.
what else did I have on mine?
Surprisingly, you have to play a round of golf to get a golf handicap.
Yeah.
I mean, you fucking blow my mind here, Ben.
Go on a family, more family holidays is the other one I've got on here.
Family holidays.
Oh, you?
Yeah, more family holidays. As I realised that my wife, daughter, and I haven't left the UK since October 2024, which is fairly depressing.
Didn't you come here for that as well?
I came. Yes.
Hang on.
So even more depressing. I had to see Charlie on my holiday.
Hang on. I'm pretty sure I saw you here in 2025, Jimmy.
Not with Izzy. That wasn't a family holiday.
I see. Very good.
See what I did there?
Very good.
And a few.
I haven't brought my child along for one of my luxury holidays in over a year.
The other thing, which actually I was one of my 2025 goals was to try and read a bit more books wise and not be on a screen so much. I did quite well at that. I'll try and maintain that.
Do you mean like paperback or did Kindle count? Because I did that, but with Kindle.
In fact, no, I don't own a Kindle, so I thought I'd just do it with regular books. Try and support the Waterstones IPO later on this year.
But just sort of side note, but they are nicer, aren't they? Actual books.
Yeah, they are.
Yeah.
Like, just genuinely, they are actually.
But it's so much better to have an iPad or a Kindle.
I don't like an iPad. For that sort of it's the backlit screen, isn't it? In some way, there's something about the difference there that's more strain, or maybe it's just knowing there's so many distractions at one swipe away.
Yeah, I'm going to try and give it. It's a fair point, Jimmy. I'm going to try and give my iPad reading, session another go. It has not worked for me, that particular one yet, but if not, then I will go to
good one
like yourself.
If I see someone reading on a Kindle or an iPad, I tend to think they must be reading something that's too embarrassing to own a paperback book of, so people don't want to see what they're reading.
And what was your favourite book of last year, Jimmy?
My favourite book of last year? 1929, The Wall Street Crash one by Aaron Ross Sorkin was really good.
Okay.
Some super interesting characters in there. That was a proper good read. The one I want to finish is there's one on NVIDIA on Jensen Huang's life, basically.
We read exactly the same things, you and I.
Yeah.
And Charlie Lambert, what are your resolutions for this year?
Well, I was kind of interested. It's nice to go last because sort of absorb what you boys are thinking. I suppose I'm a bit like you, Ben. Normally, quite like to get into the New Year's resolutions, and that my overall thing this year has been quite sort of flat and lacking. And not because I've totally succeeded with last year's. I actually need to get the list out and see how we did. But there are a couple. They are mostly around similar, little adjustment to the thread, but mostly around making the most of things that are already there. And for me, that's cars and going to do more with them in particular. So I want to actually achieve 4 road trips this year. The first one is booked. That's the good news. Driving up to Andorra to go skiing in February. And then we're coming back down via the coast of northern Spain, which is a part I've always wanted to see. It's where a very good friend of mine, and Jimmy knows him well, James Huertas, was born. So I kind of want to go and so he's given me a few places to go and have a look at there. Haven't got to the other ones yet, but we're also doing, I wouldn't classify it as a road trip, but Jimmy and I are off to Caffeine and Machine in one of our cars in the next couple of weeks. And I really, really fancy, I know we've got Le Mans, although we've managed to get tickets for that accommodation, but we'll fix that later. We've got Le Mans this summer, but I also, completely down to Chris Harris on Carl's podcast, have decided this is the year I'm off to the Isle of Man TT. So unfortunately, my aunt and uncle lived there for 20 years or something, so I'm hoping they'll be able to hook me up with somewhere to where the best places to go and do those sorts of things. But
who are you going with?
I don't know yet.
Okay.
You apparently.
Yeah,
I'm going on a motorbike though. Oh, you can ride bitch.
No,
Cuddle me.
No, it's fine. I'm out. Thanks.
Well, you can meet me there. You don't have to come.
Yeah. I'll see if I meet you there. I'm not doing any motorcycle shit.
So yeah, I think it primarily revolves around that kind of stuff. The other sort of the book thing is kind of, it's a little similar to you, Jimmy. It's more about working on less multi-task. I would say my big reflection, and that's not necessarily a New Year's thing, is the curse of AI has definitely arrived, as well as the benefits for me. The ability for me to run dictating 3 different agents simultaneously all day means I now feel my brain is working even harder to power all 4. You know, you're achieving 3 times more and you're working 3 times harder. And so somehow you get into some sort of death loop of trying to over deliver constantly. It's like, so it's becoming increasingly important to very consciously carve out time to pause. I think last year was, like you said, successful, but jeepers, hard. So we need to just find sensible time to be humans in the middle of it all. But I haven't 4 road trips would be the only sort of numeric tickable list, but there'll be more coming.
I've got one more.
Buy shares in Carcoon as well, because apparently we're going to need a few more of those. And buy a Jaguar.
Buy shares in what?
Carcoon, which are these protective pods that you put your cars in when you're not there and keep it safe. And genuinely, the one I forgot to say that was on the list, jokes aside about the thing, I've found a Jaguar, old Jaguar XJ, which is a car my dad had when I was a kid on the island in Mallorca. So buying a Jaguar in 2026 as well.
Hang on. No. We are buying our car first, which isn't going to be an XJ, and then you can buy a Jag. You promised me.
Yeah, I know, but I found this one. You can drive it with me. You can have it. It's great.
I don't want a Jaguar XJ, thank you very much.
Buying a Jaguar.
But then stick your old classic.
Anyway, sorry. You were going to say something. Sorry, buddy.
I was just going to say I've got a Jimmy Type 1. I want to play more tennis. I'm good. I was thinking that you and I, Charlie, could get a tennis lesson once every 2 weeks together.
Oh, sounds like a business expense to me.
Me too. Anyway, I hope you've all been inspired by some of our lofty ambitions, especially looking to get a golf handicap.
It's definitely the winner. Do you know what? Do you know what we need to do? Let's go get our golf handicap this weekend, man. Beat him to it.
That would be hilarious. Imagine getting a golf handicap.
It's too cold to play golf here at the minute.
Yeah. We would love to know what some of your resolutions are. Keep it clean or not. We love you very much, and we look forward to speaking to you, seeing you, and talking to you again next week.
Bye-bye.
Ta-ra.